Hello, hello, hello. Good morning. Happy Thursday. Can't believe the week's all over going into PPI Friday. How is everyone doing? Good morning, Patrick, Dave, Andrea, Options 22. Haven't seen you in a couple days unless I missed you. Stafford, morning good. Well, welcome, welcome, welcome. Good morning, Gary. Christoph, hello. George, is it still 3% down today? Just wondering, so I can position myself. Grand Rising, Christoph, or are we getting the bounce? And yes, I know it's not technically Turnaround Thursday, but I just put it up there because we could get a little turnaround bounce into PPI Friday. The week's almost over. All right. So we had initial jobless claims coming in right at forecast. The revised number was 1K higher. So not much there. Continuing jobless claims continue to climb. Continue to climb. So definitely people who have lost their jobs are not finding new work as quickly. And numbers keep climbing. So that's where we stand. And by the way, it's very quiet the rest of the day. So nothing. It will either be headlines or people positioning themselves for PPI Friday. Just remember that in case you can't tune in this afternoon. 7:30 tomorrow, 1 hour before the open, we have the PPI numbers, and then 9 o'clock we have the consumer sentiment. So a bunch coming out tomorrow. So we're getting a little bounce back. Key support tested again last night and holding, invalidating those little double bottoms. So there will be potential breakout plays or breakdown plays setting up. Little rotation into some of the mega caps, and oil is strong. Oil strong reversal overnight. You see here energy leading so far today. So that's where we stand. Energy, basic materials, and consumer cyclical and communication services bouncing back a bit. Fed watch still, where's my Fed watch? There it is. Still favoring the 50 basis point at 75%. Fear and greed. Still hanging on to greed mode just a bit. Remember, we are still in negative gamma, so any snapback rally can have a little extra juice, and the gamma wall still is at right around 4K. Does that mean it has to stop there exactly at 4K? No, but that is a key area. And also remember, we have a massive quarterly OpEx, not this Friday, but next Friday. In terms of earnings, there's nothing today, but after the close, Costco, Lululemon, DocuSign, Broadcom, Restoration Hardware. Big ones, Costco, Lululemon, Broadcom in my book. Secondary, Restoration Hardware, and DocuSign. Oh, and there's a little Manchester United. So do not. So there could be some volatility after the close and going into overnight and positioning for PPI, depending on if there's either big beats or misses. All right. So far, channel holding, we tested the lows again. You see dead test on here. Is this a double? No, not, because this is now a triple based off the place we're into. So far, holding against the key closing resistance on the 1 hour, this 39.55 from yesterday. So that's what I'm watching coming into the open. And on a continued up move, we also have it now. This is getting into a little more aggressive, but it is a valid percent B buy with the cycles at the bottom. So any intraday break within rally, if it does hold into the close, could lead to some more follow through. I've reversed the harmonics. The minor target area I'm utilizing is about 39.85 to 39.90. The major target area is right around 4,010 to 4,018. So yes, that's right through that 4,000 wall, but we have Based off the harmonics reversal, between the 50 and the 62.5 will be anywhere I'm watching for a more sustained bounce, especially with PPI coming out tomorrow. And we have a revisit potentially of the declining 200. Now, the declining 200 isn't the first reason I'm focused on there. It's because on any bounce play, the major rollover zone is between the 50 and the 62.5, especially with the cycles being at the bottom. Now, longer term, does that mean we're at all comfort level? No, because weekly cycles are still confirmed now the rollover and at the top. So we have much more downside potential, but whether it happens this week or next, we will have to see. What am I missing here? Good morning, John. Okay, we got some cool talk amongst yourselves. I got punked on my ES long, hit my stop loss and rallied back. My fault because I tried to make something happen. Trade smart or else. And it'll still happen, Sterling. You now, if you force something, that's one thing. But hey, there are trades that trigger and just hit your stop right away. It's part of trading. And sometimes it could be because you force something. Sometimes it's just part of trading. So you got to learn to separate those two. If you followed the rules, it's just part of trading. And these are tough markets to trade in. Coco's waiting for next Tuesday's CPI in front of J-Pow Wednesday. Good morning, Martinez. Hey, Chris. So that's what I'm keeping an eye on. But this little key area has to sustain above 39.55. If we do roll over, like George thinks, I cannot get bearish until we break below these key lows. I can't do it. We've tested it 1, 2, 3 times, so this is the make or break level. Anything else in there, it's still caught in consolidation. Into the NASDAQ. The NASDAQ also, now this is a potential double. The NASDAQ now has a potential double. That is not a triple. So, have a pattern in there. Where would that take us back to, though? On the daily, that's not a massive bounce pattern. Again, we have the harmonics flipped, and that's even in front of the 50. And this would also not just be if we continue on this path, it would not just be a double, it would be a %B buy. Now, is this more aggressive in the NASDAQ? Yes, it is. Especially since we've confirmed but not triggered the double top. It has been confirmed, but as I said, it needs to trigger on a 4-hour basis or a daily basis, preferably a daily basis. And you can see, even on a 4-hour basis, no close below that level. So we're sort of caught in no man's land with markets, funny enough, going into some key numbers. If you do break down also, if you need intermediate targets, this is a fantastic little area. If we do break down and get that double trigger, I would use the major double targets. But if you need intermediate targets for reducing stop faster, I'd be utilizing 11,332 and 11,242, and the first target being 11,159. The Dow, you can easily see the triple on the daily. Easily see the triple on the daily. So that's your key level, about this 33,470 for the breakdown play. The breakout play, the more aggressive would be about 30. I'm going to bump this down right now just a little more to about 33,370. And I would only do it on a break and a successful retest unless we get massive momentum to the upside. Where does that look like? Yes, this is also cycles at the bottom, possible %B play above on a close on a daily basis above today's high. So the way I've talked about that before, on a break above these key levels, it can be traded intraday if you're an intraday trader, and if you're a more of a swing trader, it can then be rolled into a little swing trade, little riskier going into PPI, but only on if it closes above there. If it were to go up, hit some key levels, and then come back down and no close above there, it would be no roll into a swing trade. The Russell, after triggering the double, little pullback there is a long way off. I know some people want to know where the technical stop level is for this one. It's still on a walkaway basis all the way to 1890 and on the closing basis around 1879 because there's no stop reduction. Yes. So there's even on a bounce play with this, the stop's technically farther away unless you're trying to catch something on a really tight basis for much better reward to risk. DAX still holding after triggering a double, just first target hit, holding the rotation zone. Not much else to talk about other than key resistance is now back at the 14,360 area. Spiders in the Qs. Spiders, you're going to look for that little gap up. So on any weakness, you have the consolidation here, would be trading pre-market 395. So on a move, let's just go with a down move first. The down move would be to 393.16. And then this low area, these two bottoms, 391.75 to 392. I will be utilizing the harmonics still from these low to high. So I'm not flipping it because we did not make a new low, but you can use these on the way back up. 397.60. I will then use about 399 and 420 are my key targets to the upside if we are breaking out with the cycles not yet on the bottom. But remember, it's better to follow what the S&P is doing off the open for clarity. And if you're trading the Qs, the NASDAQ off the open. A little gap up in the Qs. So first key area is 280.50 on a pullback, and then you have 279.17, and that would trigger the double. The intermediate levels, if you need intermediate levels on a breakdown play, 277.10, 275.03. Then the first target from the double, if it does trigger, is 272.13. The rally area on here. Now this one gets flipped because once I get to it. This one gets flipped because it made a new low. All right, so the key areas would be, first off, we have a percent B at yesterday's high right in front of the 25. So I'd be utilizing yesterday's high, 282.57. And then I'd be using, it's a little, let me clear off a little of this. We got a few too many levels on here. I can put those levels back on for a breakdown play. Then I would be more focused on, you got that yesterday's high to about 283.02, but above 283, I'm focusing on this prior mini significant level and the 37.5 harmonic coming in about 285. Then the major level, if we did sustain more of a rally, would be 287.27. The notes, after hitting the final target yesterday, inside bar today, yes, this is barely technically a double. It's still holding on, but it's a long way off from confirming or triggering. So my first area is virtually on a pullback yesterday's open, which corresponds to, it's actually between yesterday's open and low, which corresponds to the rotation zone. Then below that, I'm targeting 113.24. Any rally back would be in this high area, and I'd be using shorter term harmonics. But since I'm waiting for another larger setup in there, there's no other major patterns I'm watching for. Dollar index, still watch this 104.60 area, 104.55, 104.60. We start breaking below that, I'll watch 104.36 on a closing basis, but still, this after the little rally and holding the 8 on a closing basis, this is the key level. because if this level holds, I will be focused on a potential reversal breakout play. So I'm keeping very close eye on the dollar. Very close eye. VIX, this one's, I'm watching yesterday's high and on the pullback, the key close and yesterday's low. So that's 22.16, and then for the breakout play, 23.01. So those are the key levels that I'm utilizing on the VIX after the substantial run up, but cycles are at the top. So keeping a clear eye on the VIX also. Crude pulling back, interesting enough, with this highs. So cycles at the bottom, but crude pulling back. Going to be watching for more of just some sideways price action unless we close above yesterday's high. Lots of things could be pausing today. Bitcoin, nothing. Still at yesterday's close. Tesla, still expecting the return between the 87.5 and 100 because we closed below the six, or actually we closed up yesterday, yes, below the 62.5. The 87.5 is 170.10, and the 100% would be back down to 166.19. Cycle's not yet at the bottom. On any up play for this morning, it would be to yesterday's close, 174.04, and the next level I'd be using is a return to 178.46. Where do we sit? That EXPR reminds me of Bob talking about how you can be right or dead wrong on what you think, but it doesn't matter. What matters is the price, is what the price does. Correct. Again, I can think something's going to happen. I can have a great plan in my mind, but price action matters, and that's why the patterns matter, because it keeps you objective. No matter what you think is going to happen. What else? What else? What else? Just Euro. Watching for this to form a potential double top. Pound. Watching for the same thing. Or it's going to form the breakdown play. I know that sounds like, hey, well, you said it could. I'm watching for the potential double top. It's still holding the rotation zone, but as I talk, this is a stair-step move higher with waning momentum. So if it doesn't form a double top, I'm watching for the breakdown below, at this point, yesterday's low. Especially after this key run, we're up at overbought levels and cycles have been pinned to the top. Sorry, I forgot to update this on the weekly basis. So that's why I'm watching for more of at least a short-term topping pattern in the euro and in the pound, which would then correspond to a short-term bottoming pattern in the dollar. With that, can you pick on CN, or can I pick on it? Ugh. Oh, so they beat. Double beat. Big gap up to the 200. Big gap up to the 200. For me, I'd be watching not today, but it's going to looks like it's going to fill the prior gap here. So any target would be to 50.74. We're trading 50.30. That would do the final gap fill, and then you're leaving behind a gap, and your key support now coming in at 48.26. If you break down below that, I'd be starting to target on the next market rollover a gap fill play after reconnecting with the 200. And wiping off that gap fill. Now, if it does sustain more of a rally, you still have one little more gap fill that formed this. I think that was a double top. Yep, from before. So that would be if it's a stronger rally continues it would be the next target would be 53.62. So if you're already long, I'd be utilizing those key levels as stop raises. All right, not seeing much else. My advice today is also still, if you don't have much going on and we don't get strong tick, avoid potentially getting chopped or key. It could be a slight bullish bias, but with more of back and forth. We have no news the rest of the day. Now, if some headline comes out, that's a different story, but there's literally nothing on the radar screen, and we got the PPI numbers. Now, they are junior to the CPI, but, you know, it's going to still make a difference with people still wanting to buy the dip for the Santa rally. Any excuse for the Santa rally. Dennis, thank you for being here, Dennis. NVIDIA. Nothing's really changed. Just holding the daily rotation zone. So that's the key level you're going to be watching on a closing basis. All right. Yesterday did not close below 62.5. So the first level I'll be watching is 158.99. If we start breaking down in NVIDIA, you're going to target these lows in the 50, which is about 150.50, and then the double is still in play. On a rally, you're trading against a little harmonic cluster right here, but a break above, and it looks like it's going to open above yesterday's highs, so I'd be utilizing 164.46 as the target area. Then you still have a little minor gap left in play to 166.10. So those would be levels I'd be utilizing to the top, to the little top. Also, you are getting sort of this channeling pattern. So overall, unless this all of a sudden gets a lot of strength, I'd be more focused on the roll over play after another little topping pattern has been put in. Mike, are you going to stream on TradingView at some point? I will do a stream on TradingView. It'll probably be more of a targeted stream because I want to keep the overall content on YouTube, but I will set up for a stream. I just have not had time to do that yet. And the primary stuff will always be on YouTube for the people who, I mean, anybody can sign up for a TradingView free account. So you might as well, if you don't have one, sign up for the free version. Use the link in the description below just so you have it, because you can watch live streams on TradingView without having a paid account. And you still get to use the full platform with just limited number of indicators. So you might as well just have that in your back pocket in case you ever need it anyways. All right, just peeking in at the S&P going into the open. Back below the key level, so it needs to regain 395 and then really hold it before I can sustain anything bullish. I'm just on guard for choppy or bullish, even if this holds up. All right. Again, if you don't have anything, do not force any. This is not the day to force anything. This is actually not the next few days to force anything. We got too many things on deck starting tomorrow. This is not the next week to force anything, I should say. PPI, CPI Tuesday, rate hike Wednesday, and then massive OPEX on Friday. And then it should quiet down going into the holidays. With that, I will talk to everyone later. Thank you, Andrea. Thank you, Ramsfold/Dave. Thank you, Charles. I'll be back after the close with Bob, and we will see everybody then. Bye.